Alright, I hope everyone's doing well. I'm going to make a very brief video. I will expand on this later on in the upcoming, maybe later today or tomorrow. This person, you can read both of these real quick. This was this person's first question, kind of first message, second message. But their issue is failed breakouts. And they had a little, they called it trading meltdown. As you can see over here, a little mini meltdown. But they said it's funny because after the meltdown, they feel like they're doing better with trading. That typically happens. Every time you have a frustration through trading, it seems that whenever you feel frustrated by trading, if you stop what you're doing and just review some things, look over things, study some things, pieces will begin to click. And so in a way, I was telling this person to embrace those mini meltdowns as a learning opportunity to improve on something. So, failed breakouts, he's having trouble with breakouts, failed breakouts, this person is. And what I told this person is, or what I would tell this person is, yes, this person's asking, if only 20% of breakouts succeed, then maybe I shouldn't even trade them. However, I've seen them as big moves. Well, yeah, I mean, you're in a way, yes, only 20% are successful. And let's look at a chart real quick. The problem with trading is now, it's all fractal, so it's all mushed together. Is this a breakout? Yes. Is this a breakout? Yes. Is this a breakout? Yes. However, when you look to the left, is this a breakout of this? No. So it's all combined together. So the first thing you have to do is, number one, take Al's course and learn as much as you can from it, as much as possible. And it's going to take, my advice, get some good earphones and use your phone. Play the videos on your phone. Play the videos on your computer. The more you look at the videos, the more you look at the slides of the videos, the better, the more clear you'll see things. Second, you got to place trades. And you got to place trades in a manner that you're not going to just blow your account and spend all your money. So obviously trading the SPY or trading a Forex position or trading a Forex market. Third, I would really recommend, if you have the ability to trade the SPY, I would definitely recommend Al's webinar. If you do not have the ability, I would still recommend Al's webinar on the trading price action, or the Brooks price action trading, the Brooks price action website. I would highly recommend the webinar because you can hear him talk real time about his thoughts and just where bulls get in, where bears get out. He really explains swing trading well. Now, the thing with that is, it takes many, many months, in my opinion, to really familiarize yourself with Al's language in the webinar. So, if you get in the webinar and it's really confusing, it doesn't seem to make a lot of sense, he's not really giving you any direction, you will begin to understand more of that through time. So, if you're going to get in the webinar, I highly recommend it, and you need to give it more than 1 month. I've probably been in the webinar for over maybe 3 years by now. I'm not sure, but it's at least been 2 years, somewhere between 2 and 3 years. And that's probably been being able to ask Al questions and listen to him throughout the day. Probably been the most helpful thing ever out of all of this, just because you go through so many days of just hearing him speak about the day. Alright, so breakouts, failed breakouts. Best thing I would recommend is keep your trading simple. Start with learning how to trade just always in type of trading. So, and breakouts, only trade breakouts, trade stop entries, and don't do limit orders. And when I say limit orders, I mean buying below bars. Just wait for good stop entries. And if you do that, you'll learn that this could be very profitable. So let me just go to a random day. All right, what about here's the 15th. Okay. Gap down, so spike. Probably have to go sideways, shovel bars. Bears, will they sell below? They can, but it's not a great sell because you're far below the moving average, and price will have to go sideways to the moving average. Bears, second entry short, better. They got to get out here. Bulls will buy this close, however. Now at the moving average, sideways. So Bulls are probably going to get out. Maybe they get out below the second entry. However, if they do, in theory, Bulls have to buy again. And then we really went sideways for many, many bars. Bulls will buy here. So there's a lot. So what makes a strong breakout? Well, you compare the breakout to the failure. So when I this, I know what you're thinking. If I was to, and I'm sorry I'll have to make this video short for now, but if we were to look at this chart right now here, you would say, gee, strong rally, maybe we'll get a measured move up. Well, the problem is, if you look at a line chart, strong gap down. So this does not overpower this. Look over here, strong gap down, but it's second gap down after a decent sideways and trend line break. And then we rallied and we ended up almost closing the gap. Let me find a decent real quick. Oh, here's a good day. So, rally into the close, gap up. So this is a strong breakout. Sideways is the best the Bears can expect. Here's the first high 1. You can call it a high 2 over here. High 3. 3 pushes down. 1, 2, 3. It's a triangle. So bulls will buy up here. Main thing with breakouts is you want to see price closing above many, many things. And then you want to see gaps. Here's a gap. So you have to be thinking, maybe this is a small pullback trend. And then we have another gap. Maybe another small pullback trend. And then another gap. So this is very strong. And you can see it just drifts up and up and up. So rather than me explain breakouts more and more at this moment, here's a breakout. Breakouts always depend on context. Big bear breakout, maybe a measure move down to this. Well, maybe. However, closing below the moving average, gap up, so big up, big down, big confusion, sideways. Big up, big down usually leads to a trading range. So the problem is, to understand breakouts, you got to understand context, and you have to understand all the other little pieces. Strong bear breakout, but what's to the left? When I see this, I'm thinking, okay, so let me just back up a little bit for you. See over here, context. So right over here, spike, 2 pushes up, low 1, low 2, maybe double top, nested double top, low first entry, second entry of this. Again, nested double tops. You will find that in the trading course fundamentals. Really, really take the time to learn the course. I definitely have not learned the full course yet, but I'm trying to study it every day. So possibly a pullback in a bull trend, or you can call it a bull flag, but tight channel. 50% of the time you get an opening reversal on the day. So you got to be thinking maybe an endless pullback. Now look, so big bear breakout below the trading range and the open of the day. And here's another little tidbit I learned in Al's webinar that I don't know if it's in the course, but whenever you have a day opening on its low or opening on its high, the open of this day was 272.97. The open, was 0.97. The low was 0.97. Al says 90 to 95% of the time you will fall below the low. So whenever you have price open on the low tick or open on the high tick, it'll usually get closed. And virtually almost every 90 to 95% of days, maybe more, maybe 95%, have at least a one tick tail on each side. You can see right here, well, could not close below this low. Good bear bars, but trading range, big up, so spike, maybe a 50% pullback. So bears that sold will get out right here. Possible second leg trap. Then we get a second entry short. And then we just keep rallying up. So big down, big up, big confusion, sideways. So kind of forming a triangle. And looks like sideways for the rest of the day. So again, keep studying the course, keep studying context, and it'll begin to make more and more sense. And I will make more videos this weekend about breakouts. Here, look at this bar real quick. Gap up, stop entry buy. Yes, however, it's forcing you to buy at the top of a trading range. At least probably 20%, 80% chance will fall below this low because one of every 5 days, usually the first bar is either the low or high of the day. And then you can see right here, we fell below it. That's all the time I have. Thanks for listening.